Hello everyone, hope you guys had a great weekend. So today is already Monday, 26th of July 2021. So we are going to run through our weekly forecast that we have posted on TradingView.com. And first off, we want to talk about the dollar index. Alright, so today is already Monday and we are in the US session already. So we can see that the dollar has came down quite a bit today, but we still want to understand that it is still within this rising channel. And not too long ago, in fact last week, the price has already broke out of this symmetrical triangles. So as long as the price is still sitting within this rising channel, I think the dollar still has the ability to continue to trade higher. So we're going to see how dollar will be closing today. Anyway, it's the very beginning of the week, so there's no need to rush, but in any case, when the price came down to where we want, we can just execute the trade accordingly to our plan. So for the dollar, based on the situation right now, of course we are going to look for buying opportunity, because we are expecting that the price will be able to climb higher, all the way, very possibly, all right, back to the equilibrium level, because fundamentally right now the dollar is actually strengthening due to a risk-off market, because of the Delta variant that's causing the recovery of the economy to be halted in a way, so which is why the dollar is strengthening. Alright, so let's look at what we have posted for the week. So first of all, we have the euro against US dollar. So today we want to visit the weekly time frame instead of the daily time frame. So right here we are looking at the weekly time frame. For the past few weeks, both the highs and the lows are trading lower, and the recent symmetrical triangle has been breached and rendered invalid. So the symmetrical triangle, which I have already removed it. If you can still, if you're able to visualize the connecting the lows right here and the highs right here, you get a symmetrical triangle, and somewhere right here has already been broken. So therefore, that formation has been rendered invalid. So from here, we can clearly see that the current bearish trend that started from 1.2250 is, number one, not showing any signs of reversal yet, and number two, the midst of fulfilling the similar volume as the previous bearish wave. So this current bearish wave, all right, has been pretty strong. There's no sign of reversal, and if we look at the volume and duration, all right, of the previous bearish wave, this could potentially form a AB equals to CD, and therefore there's a very high chance we are going to see euro dollar continues to trade lower. All right, but bear in mind this is a weekly time frame. So right now, as you can see, euro dollar is kind of has been climbing throughout the day, but we're going to see if it's able to continue higher, at least unless it's able to break above like 1.1840 or 50, then we might be able to see some changes from there. All right, so this is an ABC corrective wave, of the previous motive wave that started at the beginning of the pandemic, and right now is the last C wave of the ABC corrective wave. Now you can see that when the price was at the low right here at the very beginning of the pandemic, it came up, all right, and then eventually it forms an added wave, and right now it is into a corrective wave. All right, so that's also one of the reason why we thought that the price can continue to go lower technically. All right, and otherwise this can also be seen as an AB equals to CD pullback pattern, which I've just mentioned. And we have seen the dollar strengthen amid rising inflation, which caused the markets to raise expectation for an earlier tapering from the Fed, and this could also persist for a little longer and aids the current bearish wave to complete an ABC corrective wave, of course inclusive of the Delta variants that causing the market to be a bit more risk off right now. Alright, so as such, we will be looking for a couple of more selling opportunities towards the demand zone that sits right above the major equilibrium level at 1.1580. All right, so this zone itself is where we want to aim for, and then from there we will want to buy. That is the major equilibrium level. That is where this entire corrective wave or AB equals to CD pattern is going to be completed. All right, so again, bear in mind this is the weekly time frame, so it's going to take a couple of weeks. It can even take up to 1 to 2 months time, so be very patient with it, and we'll be looking for selling opportunity in the smaller time frame on an intraday basis. All right, so that is for the euro against US dollar. Moving on, we have the gold. So gold marked its first weekly loss in just more than a month, and gold price has struggled to maintain its recovery from the previous sell-off as the dollar continued to strengthen amid the outbreaks of the Delta variant. So however, we still see the gold finding support and staying on the previous range, which could potentially invite another bullish wave in the coming week. Alright, so you can see that although price has came down, but it's still sitting right at the top of the previous consolidation or range right here, and still staying supported. So we kind of still expect the price to go up eventually. Alright, so this week we expect the market to be either ranging, or it may start to rebound off the support term resistance level 1790 and head for 1850. 1850 is right below the equilibrium level right here. And we also do expect some fake out of 1790, which may push the price to as low as 1770 before it starts to trend upwards. So this is just something that has got to do with the behavior pattern of the gold itself. All right, that it always likes to try some fake out before it really moves in its intended direction. So that is something about gold as traders we got to be very careful about. So maybe we can just take a look at the gold charts and possibly let's go and look at the 4-hourly time frame. All right, so as you can see right now, the price is still sitting at this level, right, this resistance and support level, and you can see that this is the very first pullback from this entire bullish wave, and then the market just consolidate in this manner. So what we are actually expecting going forward, maybe by tomorrow, there's a possibility the price may continue to trade lower, and somewhere right here, as you can see, there's some demand right here. All right, and after completing 2 bearish wave right here, it may then continues to go up accordingly to what we have in our weekly trading forecasts. All right, so this is what we are looking for, and therefore we are waiting to buy right here. Unfortunately, we could have also sell somewhere at this region, but the price did not climb that much, so we did not really attempt to sell, and actually it already went down. So we'll just be waiting for opportunity to buy it again. Otherwise, you can see that it's actually trading lower, creating lower highs. If it's able to pull back a little bit again, and you can actually consider sell again along this falling trend line. All right, that's something for you to consider. And anyway, that is pretty much for the gold. All right, so moving on, we have the NASDAQ. So NASDAQ had yet another bullish week, and once again breaking new historical high. All right, nothing new. So at the beginning of the week, the price came down and found support at 14,600, just as what we have forecast the week previous, and which led to a 4 consecutive days of bulls with no significant pullback at all. And this will inevitably attract a big volume of bull chaser. Right, people that see the trend goes up and try to chase the high, especially at the point of breakout right at this region. And what many may not realize is that this current bullish wave is the final motive wave of an Elliott wave, and that means a potential sell-off at the peak. So what that means is that, as you can see, there's an Elliott wave forming right here. And right now, it is actually the final wave. All right, so just keep that in mind for now. This is especially similar to the Elliott impulse wave that started in November 2020. And in fact, the entire pattern within the entire range channel is a repetition of both Elliott impulse and corrective waves. And so this week we'll be watching closely for sudden spikes towards the upside, as that could potentially be the trigger to the next sell-off. But just to be clear, we are expecting a sell-off in the sense of a major pullback, not a major reversal in the entire market trend or like a market crash, right? I think there will still be some time away, so do be clear about that. So anyway, coming back to this chart, all right, we are seeing that this Elliott wave is very similar to what we have right here. All right, and actually just before this there's also another Elliott wave right all the way to the back. Okay, and you can see that every time after the markets completed Elliott wave, it went into a ABC correction right here as well. So therefore we are expecting the price complete right to peak right at the final wave of this Elliott wave, and essentially it will come down and complete another ABC pattern, something like a W. All right, so this is what we are looking at, and therefore we are going to start to look for selling opportunity for NASDAQ. And usually for it to come down, there's two scenarios. All right, either the price is trending hours, all of a sudden it shoot up very fast and then it pulls back all the way down and start to go down, or it can just reach a high and all of a sudden it's like there's no volatility. All right, very quiet, and all of a sudden it just plunge. All right, so usually these are the two kind of scenario. Of course there are other variations as well, but these are the two very common ones that I personally experience in trading. All right, so that's for the NASDAQ. Let's move on. Next we have the WTI. All right, the oil. WTI has roller coaster ride last week as it tumbled around $6, but managed to fully recover and ended with a small gain. All right, you can see that the price came all the way down. All right, found support right at the previous resistance and support level and recovers all the way upwards. So the sell-off is largely due to the OPEC Plus efforts to increase oil supply to stabilize the oil price, but still it has been outweighed by the growing inflation expectations globally. All right, although there's Delta variant and stuff like this, but the actual fact is the economy is recovering, is reopening up. All right, and the demand for oil will be here and inflation will continue to rise. All right, period. So however, there were some significant breakouts of the bullish structure, such as the breakout of the bottom of an 8-month rising channel and a strong rejection from the major equilibrium level at 77. So as such, we might experience a period of ranging markets between 77 and 65 for another couple of weeks. All right, so let's look at the chart right here. Right, so what we're seeing is that this is the rising channel, as you can see, and it has been broken. All right, due to the sell-off. So right now it pulls back, and because of whatever that's happening right now, we are expecting that it might continue to range for a period of time, because this entire rising channel has been broken. In fact, there's already multiple breakout of rising channels like this, and this is I think this is really a much more major breakout right here. So therefore we are expecting a period of ranging market from here, and therefore right now the price is already very near to the top. All right, we have a trend line right here, and therefore this week we will first look for selling opportunities, since the price is already at the upper band, right, of the current range, and may face rejection at the current neckline level as well as the bottom of the previous rising channel. All right, so right now it's at the bottom of the channel, and of course the neckline right here. So we have technical resistance to actually look for a selling opportunity right here. So however, we still maintain an overall bullish view for the simple fact that inflation will continue to rise amid a global recovery from the pandemic. All right, so although we do want to look for some selling opportunity because it's at a high right now, we expect ranging markets, but end of the day, definitely we will want to buy whenever it comes down. Right, whenever the price comes down, the lower price, in fact you can just make use of moving averages. Right, so right now, as you can see, every time the price touches the moving averages, it went up, and you can actually take multiple moving averages as a demand zone for the next buying opportunity. Let's say if it comes down again within this area, you can try to buy. If it's able to break lower, you still have the 252 moving average right here, and that's where you can buy again. Now, obviously this area is a very strong demand zone, all right, just to point out, all right, from the chart right away. All right, these are the things you want to take note of, especially on the fundamental side for the oil markets. So last but not least, we have the Bitcoin. All right, Bitcoin has been very interesting today because it has now went all the way up to 39,000, and as of now, the highest it ever reached was very close to 40,000, right? But after that, we do see a very strong resistance or a pullback within this supply zone, which we have shared within in this post as well. So let's move on and read it. Bitcoin managed to push away another attempt to break lower and climb throughout the week. Alright, so this is the low. I thought it will actually come down and try to fake out a bit again before it goes up, but it didn't. So there's been statements going around with Bitcoin market leaders to support Bitcoin, or Elon Musk, or Cathy Wood, and I forgot about the other guy's name, and that they are holding and may buy more again. All right, so nevertheless, this rebound could still be very temporary as the market is expecting a strong buyback at a much lower price, and it probably doesn't make sense to buy right now as it is still considerably expensive. So the trend also hasn't changed technically, with both highs and lows still going lower. This week we can probably expect the price to climb a little further, but we'll be looking to sell at 36,000. But as we know, over the weekend it has already reached 36,000, and today it just shoot all the way upwards. So I hope nobody actually really try to sell there. If the price does goes a little bit higher, we are expecting strong rejection at the demand zone around. It's actually the supply zone. Sorry for the typo. At about 39,000, which is right here. Alright, so that's the reason why we are seeing rejection at the at 39,000, because that's obviously an important supply zone to take note of. So ultimately, we expect Bitcoin to eventually break below 30,000 and move towards 22,000 and probably beyond. Alright, so the short to midterm view, we are still going to sell. In fact, right now is a very good time to sell at 39,000. If it goes up even higher, right, at the most, I think about 42,000 right here will be the maximum. Can it still go up? Still possible, because if we just look at the chart right here, the stronger supply zone is nowhere within this area, but it's actually somewhere right here. Right, initially when the price came down to this level, right, I was expecting something like this, but then it just reached this area and start to range downwards. So could it actually still come back to this level? Well, who knows? But in any case, we can try to sell right here at this supply zone. But if it breaks higher, alright, first look at this 42,000 and finally into this supply zone to sell. Alright, that will be the very final level. But I think the chance of it reaching this area is very low. Alright, but otherwise, I think 39,000 right here is good, and probably 42,000 will be the best price you can sell for Bitcoin. Alright, so with that, that's all we have. Thank you for watching, and if you do like what we do hit the like button, subscribe to our channel to stay updated and keep yourself ahead of the markets. So have a great Monday and have a great trading for the rest of the week. We'll see you again on Wednesday, alright, for our midweek forecast.